strategy 2. This is one of my favorite things, and when we interview people throughout the seminar and we have post-interviews, this is probably the thing that pops up the most. It talks about deducting associated entertainment. Now, it actually says that in the Internal Revenue Code here, and in Canada they say it a different way. When I first say that word associated entertainment, people think I'm crazy. This is what it means. I want you to write down one word in a piece of paper. I want you to write down the word fun. Fun. Yeah, I think you'd like that. Fun. This is where you're going to a movie. This is where you're going to a play. This is where you're going to a ballet. This is where you're... We have any golfers here in the U.S.? Any golfers here? Hi. What is your name, sir? Robert. And you know, golf's an expensive sport, so by writing it off, you're having twice as much fun. How many people would love this seminar if the only thing you learned, then we had a fire drill, was how to write off all of your fun for the rest of your life? Okay? Here's how to do it. Both IRS and Canada says that you can write off 50% of your fun. This is not Sandy Botkin talking. This is IRS and Canada Revenue Agency says you can write off 50% of your fun as well as 50% of your friend's fun if you talk business in a business setting. Now, IRS and Canada Revenue Agency will never believe you talk business while you're on the golf course. They will never believe you talk business while you're in the movies or in the theater. Is there any way to write off your golf, your movies, and theater? Yes. Here's what IRS and Canada Revenue Agency says. You can write off 50% of your fun as well as 50% of their fun if you talk business either following the fun or preceding the fun within the same 24-hour day as the fun. Does that give you enough time? Now, let's see how well, I'll show you how this applies. Let me pick out someone from my audience here. Tell you what, over here, is it Robert? Hi there. And who are you saying, what is your name? Joan? Let's say Robert goes out and calls up Joan and talks business over the phone, and then 2 hours later he picks her up and they drive to a play. Is that talking business within the same 24-hour day? What do you think? Sure. Let's say that, hi, what is your name, sir? Peter. Let's say Peter decides to drive to a football game with the gentleman next to him. Who's the gentleman next to you? Maurice. And you talk business in the car. And you have that intent to talk business when you're in that car. Is that talking business within the same 24-hour day? What do you think? Let's say Peter decides to have lunch with this nice gentleman over here. What is your name, sir? Ben. They talk business, and then Ben says, you know, Peter, it's such a beautiful day. What do you say we go play golf? And Peter says, you know, I'll go with you. Well, I have to use your clubs? I'll go with you. He might have a 300 handicap, but he's going. Is that talking business within the same 24-hour day? Now, the problem is, who has the burden of proof in both U.S. and Canada that we talk business within the same 24-hour day? Does the IRS or Canada Revenue Agency, or do we have that burden? We do, and we do this from our tax organizer or tax diary. And here's an ideal documented fun day. Before I went to work for IRS, I was a tax shelter syndicator. I used to put together real estate limited partnerships. I had $11,000 of entertainment deductions in 1977. I don't think anybody had as much as I had. All new employees of both IRS and Canada Revenue Agency must be audited. That is mandatory. On my diary, I wrote down $200 for food and theater. I then wrote down who, Nick and Carol Hillman, these are real people, where, Palm Restaurant, Washington, D.C. We then went to have fun, went to the Ford's Theater, and then I asked them for referrals, which they gave me. They gave me the name of Johnson. I wrote down the 3 most important words in the English language. Now, a lot of people think the 3 most important words are location, location, location. Or I love you. Not in tax law. In tax law, the 3 most important words are followed by theater or preceded by theater. Followed by golf or preceded by football game with the Dolphins. I am showing IRS that I'm talking business within the same 24-hour day. The IRS agent who audited me said this was the best proof of the 24-hour rule she has ever seen, and I was allowed every single dime of my $11,000 of entertainment deductions. Even better, the whole audit, they went through my diary, they flipped through the diary, the whole audit took 4 minutes. Okay? Would you say a 4-minute audit is a big savings in accounting fees? You're going to find the diary is basically your audit insurance against IRS, knowledge and Canada Revenue Agency. Knowledge is the premium for the policy. Together, you will never have to worry about an audit again. I'm honestly tell you that. Now, season tickets. How many people in this room have, by the way, I want to show you something. We have about 600 people in this room. All of you, from what I understand with Harv, that you're a pretty sophisticated bunch. You're doing very well. You're economically doing well. How many people in this room, and most of you almost said use an accountant, how many people in this room heard from their accountant? If you heard it from me, don't raise your hands. Heard from their accountant, A, that you can deduct 50% of your fund, and B, knew about this same day 24-hour documentation requirement by the IRS or Canada Revenue Agency. If you knew about both things from your CPA, please raise your hands. Keep your hands up. Look around you. How many hands are up? Out of 650 people. Look around you, folks. Okay? 5. And I'm just getting warmed up. Take all the people in this city who should have been here, add to that the other 49 states, and there was a study done by the General Accounting Office that estimates that self-employed people are overpaying their taxes, just in the U.S., I'm not even counting Canada, just in the U.S., but because of ignorance, to the tune of $180 billion a year. Billion. So if those of you have the nagging suspicion that you might be overpaying, guess what? You are. And here's the sad part. I'm only covering about 2% of what's available to you. All right. What's I want to do? How many people here have a spouse who helps them out in their business? Anybody have a spouse who helps them out? Okay. One of the biggest questions I get is, Sandy, I've got a spouse who helps me out. Can I ever take my spouse or a significant other and just talk business and deduct it? The answer is very clear-cut. Absolutely not. You can never, never go out alone with your spouse or significant other, because both IRS and Canada has what is known as a closely connected spouse rule. And for those of you who are single, how many single taxpayers we have here? We have a similar rule. It's called the closely connected significant friend rule, otherwise known in Florida, where I used to live, as Main Squeeze. Maybe this cartoon is a little too closely connected. The point is, if you go out alone with your spouse, significant other, or domestic partner, it is never deductible. Is there any way to deduct a spouse, significant other, or domestic partner? Yes.